It is not assumed that a company's stock will always continue rising given the volatility of the stock market. However, buying more shares may be the wisest course of action if a company's potential for growth suggests that it will see rapid expansion in the future. In charge of managing the future fund, huge Tesla bull Gary Black recently revealed why he intends to hold onto his shares of the company for as long as possible. Hi everyone, happy to be back at Tesla tomorrow. Gary Black recently discussed why and what would motivate him to purchase additional Tesla stock in an interview. In addition, he described how he values Tesla stock, what a fair price-earnings ratio is, and the growth trajectory he anticipates for the company's shares. According to Gary Black, Tesla will have a P/E ratio of 30 and earn $30 per share by 2030, assuming a growth rate of roughly 15. This would translate into a share price of $900. Black takes discounting into account as well because his forecasts are still for the future. While less than the 50% that Tesla enthusiasts anticipate, Gary Black claims that his Tesla model has increased by roughly 30% annually. Since Black only views Tesla's FSD as a driver assistant tool and is not a great lover of the company, it might be argued that the investor in Tesla is being extremely careful with his estimates by including the predicted earnings from other Tesla-owned companies. In what future context does Gary Black envision Tesla stock? Let's find out, but first, please remember to like, subscribe, and ring that notification if you enjoy this kind of stuff. Bell to stay informed about all developments regarding Tesla rather than the 50% growth rate that Tesla expects. Black thinks the company may achieve a 30% growth rate for the year. He predicts that by 2030, Tesla will have produced roughly 10 million cars. Additionally, the Tesla bull had earlier said that he anticipated a surge in EV usage in the United States from 6 to 60 by 2030 as auto prices declined. Gary Black recently tweeted about a revenue forecast made by well-known Tesla bull Ron Barron, who projected that Tesla would reach a $4.5 trillion valuation in the ensuing 10 years. According to a recent interview with CNBC, Ron Barron anticipates that Tesla will generate enormous profits that will eventually raise the company's capitalization to almost $4.5 trillion. Barron projects that Tesla will generate $300 billion in operational income by selling 20 million vehicles at an average selling price of $50,000 and an operating margin of 30%. When the P/E ratio is 15 times, this amounts to a $4.5 trillion valuation, which does not include the batteries for the robot taxis or anything else than EVs. Although they are approaching the analysis differently, Gary Black believes that Barron's projections of a $4.5 trillion valuation for Tesla over the next 10 years are reasonable. According to Black, 10 million Tesla EVs with an EPS of roughly $42 will be produced in 2030. Additionally, he projects that in 2030, at 30 times PE, the Tesla company will be valued at roughly $4.5 trillion, or $12.60 per share. Bull asserted that the best method for determining valuations is to use price to earnings, PE. He also stated that, given the recent price rises at Tesla, a company's P/E ratio will increase in proportion to its growth rate because it is funding future earnings. According to Gary Black, he is certain that the significant price hikes for some Tesla models, up to $20, won't have an effect on the company's standing or long-term value. The former Goldman Sachs asset manager recently noted that typically when the market leader cuts prices, they have more room to discount than competitors because gross profit is higher. He also added that in this situation, Tesla is going to be the winner in this price war, as are most market leaders when they cut prices. Black further noted that the cuts Tesla made seem to be positively impacting sales as the automaker tries to boost its growth after sales fell during the period. He also added that Tesla is still the most desired car to EV buyers and clearly the number one car with 60% market share of EVs in the US and under 20% globally, despite a year of disappointments for Tesla stockholders that saw the company's stock price fall by about 70%. There hasn't really been anything that has affected Tesla substantially despite reports of growing competition over the years. Black claimed that, especially with Apple, Tesla is still a very inexpensive stock. In order to trade at 30 to 40 times earnings, Microsoft, Amazon, and Google are increasing their volumes at a rate of 30 to 40 each year. Additionally, he said that since Tesla is growing at a rate of 35 to 40 per year, it should be trading at a significantly greater multiple than GM, Ford, and Volkswagen. The EV manufacturer is expected to make up for volume lost due to price reductions in the first quarter of this year, according to the Tesla investor and prospective fund managing partner. It thinks that although Twitter chatter and concerns about a decline in demand caused Tesla's rankings to slip over the past month, this is merely a transitory situation that will pass before Tesla's grade rating is upgraded. In October of last year, Gary Black forecasted that Tesla will probably receive an upgrade on its credit rating from the S&P. Fortunately, Tesla was officially upgraded to an investment-grade long-term credit rating by S&P Global Ratings in October. The rating agency announced that it had raised its credit rating on Tesla from BB+ to BBB, which is the automaker's first investment-grade rating. Some Tesla bulls felt that the automaker should have received a higher rating, given that it has been delivering profits for more than 2 years straight and has built up a cash position of over $18 billion while sitting on very little debt. The company stated that it now has a more optimistic opinion of Tesla's credit profile, since the automaker has maintained positive free operational cash flow and market leadership in EVs, along with outstanding manufacturing efficiency that supports high margins. S&P Global Ratings had acknowledged that Tesla had outperformed its forecasts in a number of areas. The business is confident that Tesla will continue to generate significant profits while keeping its debt low. It revealed that the unchanged forecast represents its views that, in the face of a faltering economy and a more competitive landscape for EVs, Tesla will continue to maintain low debt levels while maintaining its significant market share profitability and good liquidity. Along with being a great fan of Tesla's FSD software, Gary Black is also looking forward to the Cybertruck, which is expected to appear in mid-2023. It looks like Cybertruck will be released in July 2022. It has to be verified that Tesla is moving forwards with its intentions to introduce Cybertruck in the middle of 2023. The CEO of Tesla said that the company is still planning to begin production of the Cybertruck by the middle of this year, and he expressed excitement that this might be the company's best product. However, Gary Black also thinks that the Cybertruck will be a major project for the automaker. The Cybertruck will be the most significant and eagerly awaited vehicle from Tesla, and a sub-$35,000 car should be the company's second top priority after the Cybertruck. Gary Black clarified that the Tesla car, which is aimed for the under $35,000 market, is a distinct project from Robotaxi and accounts for around half of the market. It's crucial to remember that Gary left out a number of crucial components of Tesla's business plan, including electricity, Dojo batteries, Tesla robotics, and a host of other things. Like a number of other analysts, Gary Black believes that Tesla's 30,000 electric vehicle may be introduced in 2024. Gary Black is another ardent supporter of a share repurchase, and in light of Tesla's struggles with the market and the economy, several analysts think that a standard stock buyback could help the company. Last year, Gary Black proposed a share buyback program, saying that since Tesla's stock was cheap at the time, the company could use the dip as an opportunity to repurchase some of its shares. He also said that this would give Tesla tremendous room to grow and would help to raise the stock price. Only after the most recent price spike did the Tesla stock price begin to sustain an upward trend after a string of rising and falling trends. Even though the automaker has had difficult months, increased sales and profit margins could lead to improved stock performance in the future. How do you feel about Gary Black's remarks on Tesla? Please share your thoughts with us below, and don't forget to share your Tesla valuation with us. To find out more about Tesla's recent activities, click the next video that appears on your screen. Talk to you there.